Welcome to this webinar brought to you by Bursa Malaysia and managed by our company LifeChamp. Our webinar title today is Investing in China Market via ETFs. So my name is Shin Chu. I'm the moderator for this webinar. Now, as a retail investors, we often hear about the potential in China market. It's always a very exciting market, from booming tech giants and renewable energy growth to the rise of local consumer brands. There's always something new that's happening. But with so many sectors moving at different speed, it can be very hard for us to know where to start and which stock to pick. So that's where ETFs can help. Instead of choosing individual companies, ETF allow us to invest in a basket of stocks through a single instrument. It is a very straightforward way to diversify and to reduce our risk of holding just a few stocks. So in this session, we are very honored to have invited Mr. Sean Yap, who is the CEO and Executive Director of M&A Value Partners Asset Management Malaysia, to share his insights on China ETF and discuss the key trends that are shaping the China's markets today. Now, before we begin, disclaimer: whatever we share in this webinar is only for educational purpose. There's no recommendation for the buy or sell any listed securities that is mentioned here. If you decide to make any investment decision, you're solely responsible for all investment risk. Now, allow me to briefly introduce our speaker today. Now, Mr. Sean Yap currently holds the position of CEO at M&A Value Partners Asset Management Malaysia in Berhad. He has more than 15 years of experience in the capital market, including asset management, equity capital markets, and equities research. Prior to Red Vest, he was overseeing the institutional broking business with M Investment Bank, where he was responsible for all the equities broking business for non-GLIC institutions. His other working experience includes things as a senior portfolio manager with Kenanga Investors, where he was managing fund assets up to 4 billion of unit trust funds and private mandates. He also had experience in equity fundraising, being involved in primary and secondary markets, acting as an associate director with CMB Investment Bank in the ECM and syndication desk. He holds a bachelor degree in economics from the University of London and licensed by Securities Commission Malaysia. Sean, good evening. How are you today?
Hello, good evening, everyone. Good. Thanks, Shane, for the introduction.
All right, so we can't wait to learn from you about how do we invest in China market via ETF and what are the key trends that are shaping the China market today. So over to you.
Sure. Thanks. Happy to share with everyone. Yeah, Shane, do you mind if we blast out the slides? Yeah. Just a bit of these are the agendas for tonight. We're gonna share with the viewers and also some sort of teaching on what are the key features of an exchange traded fund. Basically, it's just like any other stock that's traded on the exchange. You can buy, sell on the stock exchange. But there are some key differences. We'll talk about VP DJ Shara China HS 100 ETF, right? This is a ETF that is currently managed by our company and our firm for a couple of years. The products actually allows investors to gain exposure to the China HS equities indirectly by buying this on Bursa Malaysia. So you don't have to convert into Chinese renminbi. You don't have to buy the stocks directly. We do it all for you with a fee, at a very competitive fee, and also to give you the exposure that investors would want. So on the third point, I'll touch on the market outlook, which is important. Again, ETF is just not something that you should buy and sleep on it and hope to collect dividends or annuities from it. Different ETF has different. What we need to study is actually the assets underlying it. What are the drivers driving the price up and down, and what are the catalysts? So the more sensitive we are to the market, the better we can in terms of catching the right cycles, both the up cycles and also to avoid down cycles. Okay, next slide, please. So very basic questions. What is an exchange traded fund? An exchange traded fund is actually an investment scheme. So it's tradable via the public exchange in Bursa Malaysia. I have to say, not only Bursa Malaysia has ETFs, but it's widely available too in other stock exchanges as well. So if you go to your broker, you can buy this stock anytime that you want, just like you want to buy a Malaysian stock or foreign stock. So the product is actually generally it tracks a specific index. In our case, it tracks the China index. So foreign investors do not have access to buy A shares. You need to have special permission to buy A shares. So only qualified investors, licensed fund managers like us, are able to buy A shares. So investors can buy, sell shares of an ETF any normal market day from 9 o'clock to 5 o'clock. And the price changes according to demand and supply, which is the bid and ask of the price. Every day, the ETF would have a reference NAV value, so it reflects the aggregate value of all the stocks inside the portfolio that is traded in the China Stock Exchange. So most ETF are set up passively to manage the mirror. So the fund manager is just there to make sure that the stocks are rightly balanced and every month or every quarter to make sure that the ETF doesn't deviate from the strategy. So lastly, when you invest in a ETF, you get portfolio investments, and there's some sort of diversification you're supposed to expect, and that would help in a sense that it doesn't you won't see a very big volatility in terms of price. But volatility is not something that is 100% avoidable. It's volatility is actually good for investors with low with high risk. Without volatility, you won't get the upside potential as well. So next slide, please. So I'll talk about a case study. So we pay DJ Sharia A shares is our product. It's listed on the exchange. It's one of the 15 ETF that's listed. We are continuously rolling out more ETF with Bursa Malaysia. So please, we'll keep you guys informed of the next one, next few products that we'll be listing once we've gotten the approvals. Also, again, I think I've said it earlier. The investment objective of this fund is to provide investment results that closely correspond to the performance of the China A Shares 100 index. So that the A Shares 100 index is a publicly available information. It should go up. It goes up and down. You can get it from your KRC screener. You can get it from Bloomberg. The ETF is supposed to track the movement of these A shares one day after when the valuation is being done. So the fund manager uses this strategy to invest in 100 Sharia compliant stocks. So it's quite unique, this product, in the sense that it's one of the few Sharia compliant product that invest in China. As you know, there are not many Sharia compliant products that give you such an exposure. And lastly, it's traded on the stock exchange. Okay, next. So a bit of information what we have here. As of September, our net asset value is 150. Unit in circulation, we have issued about 29 million units. So I think it hit a low about 110 during the trade war earlier this year. So he has recovered almost like about 30% or 40% since it's the low. I think there's more upside to it, given that the China is slowly becoming coming to terms with the US in terms of the trade war. So the market is actually seeing some sort of recovery, a strong recovery actually in China equities. I'll talk more about that in my market outlook slides later. Yeah. Next slide. So we charge only a management fee of 0.6. If you go to a unit trust, you go to public mutual, you go to any other fund management companies, most of their products are charged between 1.5 to 2%. So our product is ETF is more competitive in that sense, and the indirect fees are actually quite low as well, 0.4 and 0.06, which will be paid from the fund. Okay. So this is our trend line from 5 years ago. Year to date, it's actually recovered 35%. If you were to invest in China A shares, it's also around 35%. So our strategy, we have not deviated so much from the benchmark. But because this fund was launched about 4 or 5 years ago, when China was trading at its peak. So since inception, the fund is actually down by roughly about 6%, which is also not much, given what China has gone through in the past few years. We think we are at the inflection point currently. Just to let you know, our NAV is actually 145, and the share price is actually trading at almost a 10% discount. So it's trading below NAV value. If you're able to acquire more, there's a arbitrage potential about 10% between current market price and the real underlying mark-to-market prices in the portfolio. Next. So as you can see, we keep very little cash to reduce cash drag. All the cash that you put with us, we are invested into equities. There's no point keeping cash. You as your investors can keep cash yourself. So a fund manager should always, deploy everything that was given to him or her to invest and take the appropriate risk as what we should for charging your fees. So sector allocation, there's six major allocation. The highest sector is IT technology, followed by industrial companies, healthcare, consumer discretionary. So if we look at the representation, it's quite reflective of the China broader economy. Most of it is driven by high tech growth companies listed on the stock exchange, and followed by your industrial manufacturing related companies. Next slide. So top 10 holdings. Excuse me. Some of you are familiar with all these companies. The first one, of course, is actually contemporary Amprex. It's largest largest EV battery provider in the automaker. So even Tesla, most EV companies actually buy and purchase from this company. So it has a monopoly position, and it's one of the fund's top holding. The second one is actually Foxconn, which is related to the semiconductor sector. Third one, BYD, everyone is familiar. There was a lot of doubts when it just started off, and Warren Buffett invested in them, and he has existed. Even after Warren Buffett exit, the company has continued to do well, taking market share from all the established players globally. And I will not go into detail in the rest of the companies. Like Media is also quite, MIDAA is also quite, is actually a household name. They do a lot of electrical appliances and whatever not. So all these companies are big, large companies. They are not your small mid caps where the liquidation risks are very high. These are all proven companies that we invest in, and in terms of risk profiling, it's actually quite low. Okay, next. So having gone through the details of the fund and also the stocks that we invest in via the fund, I will share a bit about our market outlook of the China market, which is important, right? Because that would drive valuations either up or down. A little bit of economic challenges. I think there's still a lot of significant challenges in China currently as they go through recalibration of their economy to something more sustainable. So of course, the property sentiment remains weak. That's a given. Everyone knows about it. There's still a lot of debt and true shadow banking, and that's not being resolved. But good thing is largely confined to the real estate sector. So, second point I would like to highlight is, there's actually stronger investor participation. We studied the data and we look at there's a strong upward momentum on A-shares, being driven by new investors in the market. So more than 2.6 million new A-shares account were opened alone in 2025 August, and representing a 35% increase from July month-on-month, and more than 100%, 1.6 times growth on a year-on-year increase. So the retailers are back in China, and when they're back, they are really, crazy. When the market rebounded recently after the tariff news, the stockbrokers in China actually they were opening from Monday to Sunday just to keep up with the demand of account opening of broking accounts. Okay. Next slide. So moving forward, looking ahead, what's ahead? In September, we are seeing some more positive figures. The IPN numbers grew about 6.5% year on year. Service, not only industrial services production has gone up, services itself also have recovered from retail spending. We saw services grew 5.4%, and consumer spending is also showing some sort of encouraging trend. Although households are still a bit tight from the property downturn. Nevertheless, total sales reached about 36 trillion year to date, and that's about 4.5% increase year on year. So it's all pointing to a better and positive year for China. The growth is there. GDP also expanded by 4.8%. I don't think it's fair to expect China to repeat, those growth last, in the previous century where they're able to do 8 to 10% a year. 4.8% compared to developed countries is still very good. Okay. And lastly, what would change the sentiment is actually the US trade war. We see very sharp de-escalation of trade tension between US and China. Donald Trump visited the Xi Jinping last month, a few weeks ago actually, and they have agreed to reduce the tariff to by about another 10%. And in response, China have also increased the purchases, imports from US, and all this is signals and points that there's the de-escalation of the trade war. So we think the tension will cool, sentiments will improve, and as a whole, all this will bode well for the stock market in A shares, and indirectly, our China A shares ETF will track such positive turn of events as well. Okay, next slide. Yeah, I think that wraps up of my presentation. Just some disclaimers here. That but I would like to open the floor to the question for more Q&A. A very short presentation. But if there's any question from the floor, I'm more than happy to spend more time going through any detailed question with the viewers here.
All right, thanks, Mr. Sean, for sharing with us about your insights into the China market as well as what exactly is exchange traded fund. So, if you have any question to ask our speaker today, you may write them at the Q&A box. Yeah, not the chat box. Write them at the Q&A box.
Mm.
All right. So I've seen a question from Steve who asks, so right now you have a ETF that tracks the A share. How about the H share market?
I believe there's a H-share market ETF on Bursa as well, and A-shares is slightly more inaccessible. So the difference between A and H-shares is A-shares is listed on the Shanghai exchange, yeah, whereas H is on the Hong Kong exchange, where H is actually more subjected to foreign flows, whereas A-shares are actually more close in terms of the pricing. Yeah. I hope that
But usually
answers.
A share trade premium to H shares, right?
Historically, yes, but not all the time. Yeah, because there's a quota in A shares. Yeah, H shares is actually more accessible to foreign investors.
Yep. So that's your unique proposition of your ETF lah, because
Yeah,
A share are traditionally not so accessible to retail investors and also foreign investors.
yeah. There's a lot of yeah. That's right.
Mm. Um, so the next question by Kim Sheng Fu is that which index do you benchmark and how is the performance like? I think just now you have shown that, right?
Yeah, I believe it's the Shanghai. It's actually not a known index. It's a adjusted index because provided by S&P. It's a Sharia A shares index. It's a customized index.
Oh,
So
it's a
it's not
customized
your
index.
Shanghai, not your Shenzhen, not your FTSE A50. But it's a customized index of Chinese Sharia stocks.
All right. So it's a customized index for
Yeah,
the
yeah, but the
Sharia
correlation
stocks.
with China A and A shares is actually maybe about 90-80%. Yeah.
Mm, okay. So hope that answered Kim Shing question.
Mm.
So the next question is, what happened when ringgit appreciate in value? How will it affect the NAV of your fund?
If ringgit appreciate in value, the NAV will go down because the asset is denominated in China renminbi.
Mm, okay.
Will go down by the same percentage.
So there's no hedging mechanism within
There
the
is no
yeah.
hedging mechanism.
Okay. So the next question by Shu is that, um, can you explain the reason why there are tracking difference in ETF performance?
There's always a tracking difference because there are expenses incurred from managing the ETF, such as foreign exchange, withholding tax, management fees. So you should expect at least maybe 30 to 50 pips. Uh, what we call it, that's the expense ratio. So if your expense ratio is high, then the tracking error is high. So the ETF has to be of a certain size so that your transaction cost doesn't eat into your expense ratio. So it will never be a perfect tracking with the index.
Mm,
So only way to do it is unless you launch a derivative index, which is synthetic. So basically just instruments that track directly the price, but there's no underlying. Yeah. So that's a totally different proposition.
all right. So the next question is by Kennedy. Um, is the return from this ETF mostly derived from the NAV
Yeah, that's right.
appreciation?
That's right. It's mostly derived from the NAV valuation. We have not declared any distribution before.
Okay, so this ETF
Yeah. So
has no
example, right?
distribution
If you
policy
look
lah.
at the share price today, it's 136. It's trading around 136. But if you look at our announcement, the net asset value based on today's closing price in China, the net asset value is 147. So there's a ten cent difference between the current price and the NAV value. So i.e., just to let my viewers know, if you accumulate up to a minimum basket size of let's say 1 million shares and your average price is 136, right? You can take this 1 million shares and call my office and say, hey, I want to redeem this 1 million shares. When you redeem, I have to pay you 146. And if that's the case, right, when you send the redemption notice to me, when I pay you 146, you will net a total gain of 10 cent, right, from the different differential. Yeah. The reason why it's trading at a discount is because it's fairly illiquid. I have been using my investors' money to purchase as well. But the issue here is liquidity. Yeah. Okay. Next
Mm,
question.
all right. Thanks, Sean, for the clarification. So the next question is by Philip Kong. Is your fund size fixed or open ended? And how many stocks do you have in the total holdings?
Okay. Philip, thanks for the question. It's open ended. It's not fixed. As you can go to your broker and say I want 1 million shares or I want to cancel 1 million shares. Uh, and then it's I can issue however X amount of shares that you want. I can cancel X amount of shares depending on investor demand. So it's open. You can buy and sell in the market as well, or you can come to me and create new units or cancel new units.
How many shares in the total holding?
29 million currently.
I'm sorry. What he means is the total holding. How many
Oh, total stocks. I think
Chinese
100,
companies?
100 holdings, 100 different companies.
100 there are 100 Chinese companies in this ETF.
Yeah,
Okay.
100 Chinese companies.
Mm. So with the largest being CATL lah.
Mm. I think everyone's familiar with cattle, right? Yeah.
Mm, yeah. Sorry, the next question here is the US Nasdaq and the S&P 500 are very popular. So we
Mm.
have like triple Q ETF, which tracks the triple Q. So
Yeah.
and Bursa doesn't have this ETF yet. What is your view? Are you
I think Steve, you're correct in saying that. Uh, we don't have that, and given the performance of tech stocks and the Magnificent Seven, it's I agree with you. There's going to be a high demand. I'm actually studying whether to launch one or two that tracks this lah. Maybe we can do an AI or Magnificent Seven ETF play. I think the ringgit investors will be attracted to this instead of converting their ringgit into US dollar and purchase QQQ related stocks in the US. Value Partners, my holding company in Hong Kong, does have something similar. We have something called the Tech Giants of Asia, and that fund has done quite well as well. If you have time, you should check their website out. Yeah, the fund performance on the website.
mm, I think Sean, for unit trust, right? I noticed that there are unit trusts that are hedged, right? So they hedge the performance of ringgit against the foreign currency. But in
Mm.
ETF, uh, don't seem to have this feature, right? Or is there any ETF that tracks the index that come with this kind of feature? Are you able to share some color here?
I think there's the reason why is because the hedging cost is actually quite high. To hedge ringgit against US dollar is about maybe 1.2, 1.3% a year. So that will incur as an expense to the fund.
Mm,
Mm.
okay.
Um, as for China, if you look at the renminbi and ringgit, it always move in lockstep. It's less volatile compared to the dollar. Yeah.
Okay. So is ETF able to have this function, hedge function? Because
Can,
if I
can,
were
can,
to
can. But
okay.
we have to design it from the start, or we have to change through a supplementary prospectus.
Oh, I see. So it's possible lah. Okay.
Can. But sometimes when you fully hedge, you could be, hedge at the wrong side as well.
Mm.
Um,
Because if I were to invest in the US fund, my biggest concern is also one of my biggest concern is also the ringgit appreciation, lah, because right now ringgit
mm,
is getting stronger and stronger, right? So that might eat into my fund's return. So I will prefer to invest in the US fund that is
mm,
hedged, lah, right?
understand. But
So
I
that's
mean,
that's per- mm,
ringgit appreciation is only, few percent, right? So it pales in comparison to your capital gains.
okay.
If you look at your US stocks, this year on even in ringgit terms, you're still up positive by quite a big
Mm,
margin.
mm, okay.
Mm.
Um. So the next question is, how about the ESG compliance for this fund? Can you comment on it? So this is a question by Fairuz
Um,
Ibrahim.
our fund is actually we are advised. Our Sharia advisor is actually our money investors, so they look at to be Sharia compliant. There are ESG features that they need to comply as well. I.e., they don't charge interest rates. They don't deal with businesses that is non halal. Is the fund the Sharia advisor our Sharia advisor would look at our holdings periodically all the time to make sure that it's in Sharia compliant. If they're not Sharia compliant, we'll take it out from the fund. Mm.
Okay,
So
so
no beer, no alcohol in the portfolio or related industries.
when you talk about Sharia advisor, right? I mean, is a Sharia compliance status of these stocks following the standard set by a Sharia Advisory Council by SC
Yes, under the SAC.
under the
We have to
SAC lah,
comply
Sharia
under
Advisory Council.
SAC. Yeah.
Okay, so all these 100 stocks that are in your funds, they are following the standard of SAC.
It has to be signed off by our shadow advisor. Yeah.
Okay. So so the next question by Mr. Yeo Tian Kong. So following the question just now, assuming a new investor comes to you and
Mm,
invests 1.4 plus million ringgit,
mm,
so equivalent to about 1 million units lah. Okay.
mm.
How much additional shares will you buy and will you follow certain allocation of counters?
Okay, right now there's 29 million units in the ETF, right? So if there's one new additional 1 million, I have to buy additional 1 divided by 39, right? Which is around one division is about 3.5% lah. So every stock, all the 100 stocks, right? Let's say you give me 1.4 million tomorrow. The following day, I have to buy 3.5 million, 3.5% more of all of my existing holdings, based on their current rating.
Mm,
Understand?
mm,
Does that
understand.
make sense? Is everyone following?
Mm,
So it's always as a percentage to how much the fund size is, and we will buy the day after the money comes in, so that the tracking error can be minimized. Assuming we buy different stock based on what we like, and we buy the stock, let's say 1 month later, right? So the tracking error, if we do that, then the tracking error will go very crazy.
mm. So
Mm.
let's say they pass the fund to you today. Will you buy tomorrow or will you buy it like after T plus two?
T plus one, I'll buy. Mm.
After T plus
Yeah,
one.
we have
Okay.
to get the bank to confirm the money is in, then only we buy. Otherwise, we can't settle.
All right.
Mm.
Um, the next question, the follow-up question by Mr. Yeo is: so the weightage of the various stock in the 100 stock list, is it fixed?
It's not fixed. It's it's a moving thing. Because sometimes the stock price can different stock will go different ways in terms of the stock price. Some will go up, some will go down. Those that go up will have a higher weighting. Those that go down will have a lower weighting. And weight those that go down to a weighting that's become zero, we will have to take it out from our portfolio
All right. So how frequent does the index provider change the weightage of that index?
every 3 months.
Oh, so okay, every quarter lah.
Mm.
Um, so the next question by Akmal is that I'm not sure whether you are allowed to do that. So his question is, can you give him hindsight on what ETF that you plan to launch? Is it also Shara compliant?
Mm, I I can't say because I still haven't gotten the approval yet. But it will be alternative asset, maybe on the digital space.
Mm, all right.
Mm.
Yep. The next question is the current discount to NAV due to liquidity issue?
It is, and also it is, and maybe people think the market is it's just like, there's another counter called iCapital, right? Remember iCapital? iCapital also has always been trading at discount, and then some PE company wants to do a hostile takeover, buy the fund and liquidate the fund. It's the same case here. Um, I think it's partly due to liquidity. If you look at the bid ask today, right? Let's say if I were to buy ten lots or 100 lots, I would bid the price up to 140. Mm. And if I were to sell 10 lots, the price will go down to 127. So you have to be patient. If it's still at a discount, just accumulate. I've been doing since 2 months ago, accumulating at a 10-cent discount all the time. Because I control the fund, my private investors also buy this fund. Once I accumulate enough, I can cancel it and return at least more than 10% to my investors. Whereas as a retailer, for you to accumulate 1 million ringgit plus as the minimum basket size to cancel is a bit challenging.
Mm. So that's an H as an ETF. Mm.
Yeah, yeah.
So, right. So the next question is based on your market outlook. If I want to invest in this ETF, what would be the holding time frame? Should we hold more than 3 years?
I think nobody has a crystal ball of what's going to happen in 3 years' time. Uh, if you want some, it's all down to you. I think for China, they have been in the doldrums for years. I think the upside potential is more in a 3 years time frame is more than the downside potential. So I would take the position that it's a good exposure to have in your portfolio on top of tech stocks and other things. Yeah.
Mm,
Hmm.
okay.
When we launched that time, it was around one something, 180 or $2 at IPO. So currently it's trading at 136.
Yep. Because
Mm.
China market has not been performing so well.
Yeah, 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 yeah. So China will take some time to recover, but again, down to the outlook. It's not as bad actually as other developed countries. Mm.
Mm, all right. Um, the next question is not really relevant to the market, but more like career advice, right? So how do we become a fund manager like you, sir? Okay, what do we need in terms of experience and work and skill set?
You need to be curious. You need to have interest on how to make money, how to find opportunities to make money. You need to be curious about things. It's not. I mean, our financial markets are not as developed, but there's so many companies in this, right? Uh, the opportunities are there. You just have to look out. Just send an email, right? Or just call, give somebody a cold call, ask around. If you are interested enough, the opportunities are there. Yeah.
Mm, all right. Uh, okay, the next question is by Mr. Yeo Tian Kong. ICAP has a unique dividend policy or formula calculating its NAV and the share price. Is this suitable for exchange traded funds?
Uh, to be honest, I'm not sure what ICAP formula is. I'm not an investor in ICAP. But ICAP should not be compared to an ETF because ICAP is an active fund. But what is comparable is ICAP has a net asset value just like an ETF. So every day they would publish what is their net asset value, right? So for example, let me look at it. The net asset value for ICAP today is 395 and current price is 263. So the discount of ICAP is actually higher. Now, why is the discount higher? Is it justified? So can somebody really mop up everything in ICAP and then tomorrow liquidate the fund and you pocket the gain? Also, impossible, different. Uh, our ETF is China ETF, so it's very liquid. For me to liquidate 30 million ringgit in China tomorrow, I can do that within one day and without affecting the price because the market depth in China is immense, right? So for ICAP, let's say ICAP today's market cap is 370 million, right? And if together with this City London fund or whatever you want to buy, and then you as a unit holders, you ask the manager to close down the fund, I want my money back. It's gonna be harder because ICAP, if I remember correctly, invest in small mid-cap companies in Malaysia on the Bursa Stock Exchange. So if you liquidate 300 plus million on a portfolio of small to mid-cap stocks, you're gonna crash down the share price. And when the share price comes down and you keep selling, your NAV would go down, back down to today's value of 263 or even lower. So you never know. So you have to look at what's in the portfolio of ICAP, whether it's worth doing it, whether they should do it, or what. Mm. So what I'm saying is that, mm, yeah, I think I go way beyond. I think the question was dividend, right, Shane?
No, the question was the formula, unique formula of calculating the
No, I don't
dividend.
know, but I think they pay dividends. I think let's say they pay dividends of 4%, but that's irrelevant. So they can pay dividends because you can only pay dividends from your profits. So ICAP has been in existence for quite a lot of years. So by now they would have realized quite a bit of profit, and the fund should be able to pay dividends from their realized profits.
Right. Thanks, Sean, for addressing this
Mm,
question.
mm.
The next question is by Fairuz Ibrahim. For the fund allocation, I can see that the second largest sector is industrial at about 22.7%. So can you elaborate about this
Oh, yeah. So
breakdown? Like what industries are
industry
there?
is a very wide-ranging thing. If you look at Bursa Malaysia classification, it's also industrials. So industrials will cover mining companies, manufacturing companies, very broadly lah. Yeah. So, like for example, cattle will fall in as an industrial company.
Hmm.
Mm.
Okay.
Whereas Foxconn would fall under IT services.
Hmm. So the next question is in your company, sorry, in your asset management firm, do you have funds that are tracking the Asian market?
Uh, Only this. We have funds in Value Partners Hong Kong. Uh, I'm the CEO of the Value Partners Malaysia, M&A Malaysia Value Partners. We have funds and private mandates that track the local market for local opportunities. Mm.
Hmm.
The
Okay.
Hong Kong ones are actually, based out of Hong Kong. But you have any queries, please do check out our website and send any queries if you're interested. Mm.
Hmm. All right. Thanks for the clarification. So if any other question for our speaker today, you may write them at the Q&A box, yeah?
Mm.
Okay. Let's go to the Q&A. So does your ETF have a market maker?
Mm. We just terminated them. Yeah.
Oh, okay.
Because if you're a good market maker, you shouldn't allow it to trade below anyway, right?
Oh, all right. Okay, so right now the performance of the price is based on the pure supply demand of the market, lah, huh?
Yeah. Purely, yeah. Yeah.
Mm.
There's
So so a
no
fund does not necessarily need market makers. Okay.
Not necessarily, but we can appoint. We can appoint Bursa registered market makers. Mm,
Mm.
mm. And the terms will be set by us. Yeah,
Mm.
yeah.
Okay.
There should be lah. There should be. There ought to be lah. Even after we appoint, so I don't see any liquidity, right? Mm.
Mm. Okay. Understand.
We're still using them, lah, but I'm I'm looking for a new market maker.
All right.
Mm,
Hope we can appoint a new one soon.
mm.
Okay. Looks like there are no more question in the Q&A panel.
Okay.
All right. So while we are waiting, if you have any more question, you can still type in. Yeah. So while we are waiting for